Follow Trump to make money. Whether your assets in 2025 increase or decrease depends on him. Your wealth in 2025 could hinge on Donald Trump's actions. Every individual has countless opportunities to significantly boost their net worth, and recently, such possibilities have become more abundant. For instance, you no longer need to toil from dawn to dusk or pinch every penny. Instead, you could channel your entire fortune into investing in newly issued cryptocurrencies backed by Trump. Overnight, your asset value might multiply by 200 times, cementing your status as a legendary investor. Your earning potential could outpace even Warren Buffett and Wall Street titans. Trump himself is no exception. While his family took over 100 years and 3 generations to amass $6.5 billion, starting from his grandfather's era, Trump reportedly earned $30 billion in a single day through this cryptocurrency boom. Now, let's get to the heart of the matter today. I'll share 4 major moves Trump is likely to make once he assumes. If just 1 or 2 of these resonate with your situation, your wealth could double or more. Greetings from FortuneCraft. Ladies and gentlemen, why did Americans choose an entrepreneur like Trump over President Biden or Vice President Kamala Harris? They expected him to govern the United States like a corporation, transforming it into a powerhouse that attracts global investment. To achieve this, Trump and his advisors recognize the need to boost revenue, cut expenses, grow assets, and reduce bad debt. That's why Trump imposed global sanctions to prioritize U.S. interests. In the past, whenever conflict erupted in the Middle East, the U.S. deployed troops. When Japan, Germany, or South Korea felt threatened, American forces were stationed there for protection. Over the past decade, the U.S. has spent tens of trillions on its military. Afghanistan alone cost $2 trillion. These massive expenditures partly explain why the U.S. now carries a debt exceeding $30 trillion. Trump decided that if other nations don't increase their military budgets or pay protection fees, the U.S. would reevaluate its global commitments, potentially withdrawing troops from countries like Germany and South Korea, or even exiting NATO. Previously, the U.S. could sell bonds to fund its spending, but now, U.S. bonds are harder to offload, and countries are hesitant to lend more. This forces Trump to slash overseas spending, meaning other nations must pay more to maintain U.S. military presence. Additionally, Trump raised global tariffs, urging countries exporting to the U.S. to share a portion of their profits. This boosts U.S. revenue. As U.S. income rises and spending drops, other countries may see their income shrink and expenses climb. Trump's strategy seems designed to weaken foreign economies while funneling more money into the U.S.'s treasury. As an investor, when you see Europe or Japan faltering, where will you put your money? If you're a skilled professional considering immigration, and you notice other nations hiking taxes while the U.S. cuts them, where will you go? The U.S. becomes the obvious choice. This is just the surface-level tactic, like a company that isn't profitable but sees its stock soar due to a clever strategy. U.S. stocks keep climbing. Why? Because America's assets and liabilities are being managed with finesse. What does this mean? Trump isn't just focused on revenue and spending. His real aim is to optimize assets and minimize bad debt. This process will create sharp upward or downward trends, and our job is to seize those opportunities. To shield your hard-earned wealth from becoming a casualty in this high-stakes game, take action. Follow my channel for more insights on growing your money. Worried about forgetting this advice? Like the video to save it to your playlist. First, let's view the United States as a massive corporation through an entrepreneur's lens under Biden. A key priority seemed to be unchecked spending, leaving just $700 billion in the Treasury when Trump took office. Each month, the U.S. spends about $200 billion more than it earns, meaning the Treasury could run dry in less than 6 months. Trump has partnered with Elon Musk to create a department tasked with slashing government spending and boosting revenue through measures like tax hikes. Yet, even if successful, these steps only delay the inevitable by a few months, stretching the runway from 6 months to perhaps 9 or 12. Since Trump's term lasts 4 years, these efforts fall short. The only viable solution, as noted in my last video, is to push the Federal Reserve to expand its balance sheet and print more money to buy U.S. government bonds. However, printing money devalues the dollar, making investors even less willing to purchase U.S. bonds. So, what's Trump's next move? To restore confidence in the U.S. economy's stability, Trump must enhance assets and shrink bad debt. Then, even if the U.S. prints more money, people will still want dollars and U.S. bonds. His approach involves acquiring and importing assets from other countries, effectively bolstering America's corporate portfolio. Take Canada, for example, a favored destination for wealthy immigrants, rich in natural resources, easy to enter, and sharing an open border with the U.S. Essentially, the U.S. could absorb Canada with ease. Canada has long operated like a U.S. territory in all but name, with its own diplomacy and government. Think of the U.S. as the parent company and Canada as a subsidiary that's always followed its lead. When Trump suggested making Canada the 51st, he was proposing a merger of the subsidiary into the parent. The advantage: consolidating their finances. With U.S. debt at $36 trillion, many fear America can't repay it, so they opt for short-term bonds, 3 or 6 months, over long-term 10-year bonds, even at high interest rates. Integrating Canada into the U.S. would add trillions in annual revenue and untapped resources that could be mined and sold as needed. An automated cash machine during financial crises. Canadian assets could serve as collateral, ensuring solvency. This fits Trump's global strategy, printing money and leveraging assets to build investor trust. When you lend to the U.S., that money could fund investments in Canadian resources. Similarly, the U.S. could acquire resource-rich Greenland, which boasts gold, oil, natural gas, and iron reserves, conservatively valued at trillions. However, Greenland's harsh climate, dense snow, and sparse population make these resources inaccessible for now. It's like a company with valuable assets that can't yet be liquidated, undervalued but promising. Climate change could melt the ice in a few years to a decade. Unlocking these riches, buying Greenland, would be a long-term investment, akin to a 10-year savings account. With these assets as collateral, the U.S. could reassure the world of its ability to repay debts, encouraging purchases of long-term bonds. More crucially, Greenland is within reach. Though it belongs to Denmark, Denmark has said Greenland can decide its fate. It's just a matter of price. If finances don't suffice, a small police force could secure it. No army needed for a population of about 50. When Trump's son visited, Half the residents reportedly welcomed him. Owning Greenland would unify North America and position the U.S. closer to Europe, a global economic powerhouse. With these two giants aligned, would you still fret over a $36.1 trillion debt? There's more. Trump reportedly plans to rename the Gulf of Mexico the Gulf of America. This region drives U.S. oil production, hosting half its offshore platforms. Its underground oil fields are interconnected, meaning surrounding countries have mining rights. Whoever extracts faster claims more. The fix? The U.S. should set up tolls at entry and exit points, or restrict access to favor American operations. Trump also aims to control the Panama Canal, once used by others to ship Gulf oil globally. If the U.S. dominates both production and transport, these assets become American. This strengthens the U.S. as an oil and gas hub, with ample resources to fuel manufacturing, build factories, and streamline air and sea transport. The future U.S. would split into three hubs: high-tech in the West, Los Angeles; finance in the East, Washington and New York; and manufacturing in the South. It's early days, and whether the U.S. overcomes its challenges remains unclear. The trend persists, but one thing is certain. The Gulf of Mexico is now a cornerstone of American energy. The incoming Treasury Secretary plans to extract an extra 3 million barrels of oil daily. Why? Previously, the U.S. bought Canadian oil and shipped it to Gulf factories, incurring huge transport costs. Now, it can tap its own Gulf fields and deliver straight to nearby plants, saving billions. Trump's stance is clear. The economic war continues, because oil-selling nations won't lower prices. Russia, for instance, funds its war with oil revenue. Trump has urged these countries to cut prices or face tariffs. In the coming years, oil prices may dip short-term due to oversupply. While oil firms might suffer, shipping companies will thrive as cheaper fuel boosts demand. A trend is emerging. Oil shipping stocks are rising, encouraging investment in U.S. bonds. Most critically, Trump aims to minimize bad debt. He's introduced laws to privatize Fannie Mae and Freddie Mac, two major U.S. real estate firms. Once government-backed, they'll now stand alone, profiting if they succeed, but without bailouts if they fail. In the U.S., comentios, if you can't afford a home, banks assess your repayment ability. If you don't qualify for a full loan, say $500,000 instead of $1 million, or get rejected outright, the government steps in. Through Fannie Mae and Freddie Mac, it ensures banks lend to you anyway, a welfare policy to help the less affluent buy homes. It's safer than student loans. If you can't repay, you sell the house to cover the debt. Most believed the government would always guarantee repayment. But here's the catch. Banks stopped caring about repayment since the government backstopped them, happily lending more and earning interest. Before 2008, this fueled a housing boom. Poor borrowers, endless loans, and government funds drove prices skyward. Then, the Fed hiked rates, loans became unaffordable, prices crashed, and defaults soared. The government bailed out banks to avert a broader collapse, but Lehman Brothers wasn't saved, sparking the 2008 crisis. Now, after 4 years of Biden-era rate hikes, 30-year mortgage rates have jumped from 3% to 7% and keep climbing. Home prices have risen too, making a $1 million house far costlier. Commercial real estate loan rates have also hit 7%, with default rates nearing 2008. Privatizing Fannie and Freddie means no more government rescues. If you default, it's your problem. This saves money and cuts bad debt, but without guarantees. Will mortgage rates already at 7%, rise further. People kept buying homes, assuming government support. Now, with that gone, will they still buy? As I've noted before, many U.S. stores and offices sit unleased. If you borrowed to invest in rentals, but can't recoup funds, you either sell or default. Fewer buyers and more sellers could burst the housing bubble. Banks, heavily invested in U.S. FL bonds, faced losses when bond prices fell, causing some to fail. Add defaults without government backing, and what happens? Post-2008, asset prices tanked, the Fed printed money, and capitalists like Warren Buffett bought cheap. Think Goldman Sachs at fire sale prices. Now Buffett holds cash, having sold much of his Bank of America stake. If real estate and banks collapse, stocks could follow, redirecting money to treasury bills. If Trump pulls this off, he could borrow cheaply, print more, and lend to capitalists to snatch undervalued assets, like 2000. The Fed will likely keep printing, otherwise the US runs dry. But with stocks sky high, is Buffett hoarding cash to buy at peaks? Unlikely. Stocks can crash as fast as they climb, risking big losses for the unprepared. Many chase stocks blindly, suffering when prices drop. A clear strategy is vital. As Trump re-enters the scene, asset prices are dipping sharply. We expect more turbulence. What's your take on what's next? Time's short, so I'll wrap up here. For free tips on thriving as an entrepreneur or investor and achieving financial freedom, subscribe, enable notifications, and share this video. Thank you for your support. May you soon find financial freedom. Even a sentence or two here could transform your life. I feel fulfilled. I'm FortuneCraft. Farewell, and see you next time.